There we go. All right. Welcome, folks. It's good to have you on here. We're excited about this quarterly webinar, having Tyler on here as well. We are excited. Listen, we made a lot of changes. You guys have seen that. Brought some new people onto our team, and we're bringing out these awesome quarterly reports. And we're going to start doing these webinars every single quarter to answer questions. More importantly, man, we're excited about the ALOHA Fund. Not only is it's our slogan, invest with ALOHA. We love that. But we're excited to tell you about the updates and then up and coming projects that we're working on right now. So a project in Fort Worth that we'll be closing on in 2.5 weeks that we'll be adding to the fund. So that'll be exciting as well. So we'll wait a few minutes for y'all to jump in. And before we get started, I want as many of you guys to get on as possible.
Wait, everybody throw something in the chat so I know who's here. I'm going to share my screen right with you as I start it up here.
There you go. All right. Everyone should add to the chat.
You guys can see that?
Y'all from.
Ryan, you can see that. Can you see my slides, right?
Yeah.
All right, good. Let me just get the chat up so I can see that real quick. Then I'll be good to go.
Brandon Shice. Good to have you on, Brandon. Rich, Gary, good to see you again. JD, always good to see you. Sal, Mondo, Marsha and Gordon. I promise you, I owe you a call. I will call you on my way home. I did say, Marsha, I don't want you to forgot about you. I did see that I had something going on. So, yeah. My wife had surgery.
What's up, y'all? Good to see everybody.
So forgot there. There we go. John, Braun, good to have you guys on.
Yeah, absolutely. Okay, let's start in, man. Let's start in. So first, let's go through the team. Want to introduce, I know that we've had a few changes, so I want to make sure that everybody knows who the team members are and get familiar with these individuals. So you have Ryan and I. Hopefully you know who Ryan and I are. Looks like I didn't do my spacing on our names there very well, but that's okay. My last name ends with the X, and Ryan's name starts with the R there. So hopefully we can decipher that. We have Todd, who's our other partner. Yeah, there we go. Todd, who's our other partner. Then we have Mike Fritz. If you haven't met Mike, we brought Mike on recently as the director of operations. He's been doing an amazing job at dialing everything in, putting systems and structures in place. Very grateful. That's a home run hire for us. Some of you know Rowan. Rowan Turner is our Chief Purpose Operations Officer as the whole organization. She is also doing the same thing. We brought her on a little over a year ago, just barely over a year ago. And same thing, man, putting systems, process, procedures as we continue to grow and scale, which has been powerful. Eric Blackwell, another newer addition. Some of you may know Eric. Eric helps teach a bunch of our classes with our education company. And we brought him on as the acquisition specialist. We've known Eric for a long time, wealth of knowledge. Grateful for him as well. Another new addition. I feel like all these are new additions because if they haven't been here, if they're not OGs, then I believe they're new additions. And Arada is a new one, man. We, as a lot of you know, needed systems, processes to just make sure that things were getting dialed with investor relations. And man, Arada has come in and whipped those into shape. We're very grateful for her. She's done so much in such a short amount of time. And then a number of you also know Lindsay. And man, Lindsay how long has Lindsay been in the industry again, Ryan?
Oh, like 20 plus years.
20 plus years. Just sincerely, I learn from her every time I talk to her. So she's been around for almost 2 years now, I think. And also very, very grateful for her. Then that's our executive team. But, the MFCP team is bigger than just the executive team. And we have Greg, Enrique, and JD. They are investor relations specialists. A number of you will continue to meet them and speak with them. A lot of you have already met and spoken with them. I also have Marcus, who helps with investor relations coordination. He's our IR coordinator. Also a home run hire for us. He's been great. Jackson, he's a loan specialist. You guys have known him for a long time. He's been around. He's an OG, man. He's definitely an OG. Ari helps with coordination as we go through acquisitions and really just coordinating any operational processes, procedures. Also a huge addition for us. We have Brandon, who helps us underwrite. He's been around for a while as well. Rafe is behind the scenes, man. Rafe is IT admin behind the scenes, making sure that all of our I's are dotted, T's are crossed, all those kind of things. And then Carlos helps us with project management, also behind the scenes, doing a million different things, man. So I'm very, very grateful for the team and everything that they do to, man, serve y'all and make sure that these properties that we're about to go through within this fund are performing the way that they should, which is, man, it takes an army, as you can tell. So it's not very often that we roll through and talk about the entire team, but I think it's very, very important that you know that there's a lot of people, once again, behind the scenes who make this thing run the way that it does. So appreciate them. Anything else you want to mention there, Ryan, before we dive in?
No, I think it's important, man. It's amazing the feedback that we get from investors of just growing as we acquire more properties. Are we growing as a company as well, right? Are we growing to sustain your needs to be able to answer those? So the exciting is we're actually gonna be hiring on a few more people there. I'm excited about that. I know that Tyler is big on pushing. I love the ALOHA spirit, right? It's about taking care of people. And so Tyler and I have been working heavily that we will be hiring on some people to take care of our investors. Questions that you have, right? Answering those questions, just giving you the love. I said this the other day. When you go to Hawaii, how do you feel? You feel taken care of. You feel loved. We want to bring that same spirit to our investors as well. So look forward to that coming by next quarter for you guys as well. So
I also want to say one more thing. Just thank you all for your patience, because I know that, and feedback. Like, I need you to understand that. Well, and because you've scaled and grown different things within your life, but as you do that, you don't know where the problems are. Well, until they come up. It would be great if we would, could forecast everything. And maybe one day we'll get to that point. But as those come up and you provide feedback, we appreciate that feedback. Like, that feedback is gold to us as an organization, as a company. So I want to we look at you guys as partners, and you are actual partners within these properties that we acquire. And so grateful for all of y'all and everything that you do to help us there as well. We'll dive in. We'll do a quick, executive summary, some of the highlights here. The ALOHA Fund 2 was opened in August of 2022. Once again, almost, just over a year ago. 254 units is what is within the ALOHA Fund. That's over 2 properties in 2 different markets. We'll talk about both of those, obviously. Asset value of $24.7 million. That's just accounting for purchase price. It's not accounting for any appreciation or anything that we've seen. It's just like purchase prices of those properties. And then a lot of questions on and then the markets that we're in, by the way, are Warner Robins, Georgia. I'm sure you know this, but Warner Robins, Georgia, and Orlando, Florida. And then we had a ton of questions of are we still looking for properties? And man, Ryan, what's the answer to that? Are we still looking for properties?
Always. We're closing on another one October 1st, which is exciting.
Yeah, always looking, man. Always underwriting, always submitting offers. But we want to make sure that they're the right ones. So understand that as we're going through, it'd be awesome to be adding them. That's not how it works, man. We want to make sure that we put the right ones in, not just put a deal in. So understand that we are definitely actively underwriting deals, submitting offers on deals, negotiating deals, building. Definitely, major focus has been Southeastern, Midwestern states. But yes, the answer to that question, just for the record, is absolutely, always, man. That's the business. That's our job. Okay, go into some of these financial numbers here. A little bit of a CapEx summary for June, July, just the last quarter. But June, July, on Arden Place, the focus has been stabilization. Stabilizing the cash flow. We started bidding out a bunch of CapEx projects to local vendors. Arden Place is a great property, by the way. That was a great pickup. Huge shout out to Brandon and to Lindsay, Ari, all the team members who helped put that one together, find that deal, take that deal down. That's a huge win for us. Everyone on this call. And then the immediate projects that we'll start to dial in and focus on right out the gates are the pool. And then we're cleaning the gutter, some other repairs with those as well. Orlando Sky is our major focus there are the roofs right now. We have 12 of the 17 buildings need roofs replaced. That's right, Ryan? 12 of the 17?
Correct. Yep.
Okay. Thank you. 5 were previously done before we bought the property from the previous owner. But we started the pipe replacement through the entire property, the polybutylene pipe replacement. I think that started in July, if I remember right. But it's already, and is it completed now? Is it all done?
It's all done. Just finished last month.
Okay, sweet. That's a huge win too. We're there at the property, or I was there. Brian and the team visit a lot more frequently, but I was there as they were going through some of those things. Which was great. And then the financial summary, and Ryan, I'm gonna turn it over to you if you have anything you want to add on the CapEx summary, and then I'll let you lead into the financial summary.
Yeah, just on the CapEx side of things.
If you have anything else to add on CapEx, anything that I missed out on, and then just financial summary, anything you want to say there.
No, I love it. You know, a lot of the reason at Orlando Sky we had to replace a lot of the roofs is you have pine trees that are over, and all the pines were getting on top of the roofs. If you remember, Tyler, when we acquired Orlando Sky, it was a mess, covered. We were just out there last month, a month before. It's all cleaned off, but you can see somewhere where the damage is at. So what we wanted to do is we wanted to take advantage of, or take care of the polybutylene piping. If you all recall, we got a $500,000 credit from the seller, right? We actually negotiated that down, which is amazing. Got that done first so we can get that credit back. Okay, we had to put money into reserves. We're getting that money back, which is going to put us into an amazing position financially. And so now we're going to focus on the roofs. Well, just like Tyler said, we're going to clean out the gutters, right? Some of those things when trees are overhanging on properties, these sellers, I would say, default or they mismanage these properties. That's one of the things that they don't look at. These trees overhang those roofs, and it's going to damage the roof. It's going to damage the paint along the side. It just creates a lot of damage. So in Tyler saying that, right, it's just cleaning out those gutters is super important. The other thing as well, Warner Robins is an up and coming growing area. If you recall, the population growth in Warner Robins is the top per capita in the whole state of Georgia. And so, you know, some of the things we're doing is the exterior property, fixing it up. Now, my house, it's a white house, has dark mulch in it, right? We're putting dark mulch in these areas, getting all the pine needles out of Arden Place, and then just making the exterior look amazing. So these rents are already going up, and I know we're going to go into that in a minute. But I'll tell you this, you know, one of the phenomenal stats, we just got this yesterday, is since taking it over just a little over a month ago, we already have, five-star ratings already from Arden Place from the takeover, which is huge, right? So, yeah, it's a big thing. We're doing big things at Arden Place. You can see these numbers going up already, which you saw on that top left of July 2023. That green little line, guys, that green line is the one you want to keep an eye on. That net operating income is going to indicate what we're going to sell the property for in the future, right? You're going to hold us to that net operating income. Okay, so you can see that spike there. That's taking over Arden Place, which is big to you guys. That bottom right number, that tells a little bit about where the fund is at today and how much money or how much your 100,000 or whatever you invested for every 100,000. That's how much it's increasing. So you can see the ALOHA fund is performing extremely well. So yeah, we can go over a few more of those things in the financials, but
yeah, love it, man. Here's my question, bro. Did you choose the dark mulch and the white for your home because of the properties, or did we choose them on the properties because of your home? I just need clarification.
Oh boy, I didn't know. Lindsay picked that out. That's a big pick. Lindsay picked it out. It just pops more, right? It just stands out more. That red bark is just out. It's out of date, man. You know, that dark mulch, it looks good. Looks really, really good. But I'll tell you, one of the biggest things. Oh, go ahead.
Just no offense to any of y'all who have red mulch in your front yards. Okay, no offense to y'all.
There's yeah, Red. You guys got to get up the times, man. Dark mulch is where it's at. Makes your property look better.
All right, I don't know what you're gonna say. We can move on to into the next one. Were you gonna say anything else though before we go into the property specifics?
No, yeah, I'll talk about it in the property specifics. There's some things that we're doing with Arden Place that we did similar to our properties in Ohio, which I think will be a big thing. So, yeah, you go for it.
Just a quick highlight on Orlando Sky. Once again, Orlando Sky has been such a great property. Huge shout out to the team and our partners there as well. 140, just a quick reminder, 140 units built in 1985. You'll see on some of the reports you'll see 1985, some say 1986. It's technically both. Okay, as it was being built, it was built in both, the end of 1985, beginning of 1986. So if you ever see discrepancies there, that's why we go back and forth on that date. We purchased the property for $15.7 million, and it represents 9.3% of the fund. And I want Ryan to talk about, if you don't mind, bro, talk about the area, like the area that it's at, and the Rose Art, packing district, and what that means. All those details.
Yeah, I'll tell you this. There's something that I laugh at lately, right? Maybe I say this. I wasn't the best looking kid in school. My mom told me the other day that I get better looking with age, but I don't know if that's a compliment or not. But it's funny.
It's a lie.
It's a lie. It's a lie. I look at these properties, right? And a lot of people, man, they look at these phenomenal, core properties, Class A properties that look amazing. I remember when we first looked at this property, I knew exactly where it was at. Okay, I knew where it was at because I live here in Orlando. And I was like, oh, hell no. No way. Then you start diving deeper into the numbers. And then I was like, oh, wait, hang on. This is actually pretty sexy property. Then you find out with the Rose Art District that they're putting $1 billion in about a mile away. A mile away from this property, they're putting in $1 billion. So, I remember when I told you, Tyler, that it was like, you were like, oh my gosh, hell, you putting $1 billion into the property? No, we're taking a look at this thing. And so, and so that's the biggest thing is, what is the city? Like Tyler's biggest thing is, you don't invest into a property unless the city is investing in that area, which $1 billion is a substantial amount. And so really, man, I say there's this ugly duckling survey. If you were to vote on the sexy property versus this property, you'd probably look at it and be like, oh, hell no, I'm not going to invest in this. But the reality, the financials speak for themselves. This is one of our best performing assets. And a lot of it is because of the location, what they're doing. And more importantly, our staff that's on site, they love the changes that we're doing. They love that we're putting money into the property. They love that there's no more leaks now. Cecil, our maintenance guy, loves that there's no more leaks here that they have to take care of. So yeah, just a phenomenal thing about the area. Didn't know if you want me to touch on the financials or if you're going to go over a few of those key points.
Yeah, we can skip pages, but dude, now it makes more sense what your mom said, because externally you may be like Orlando Sky, where it's not getting better or worse. We'll say that it's maybe but internally and performance-wise, Ryan, you're freaking the best of the best, bro. It gets better every single year. That's what I guarantee
I'm showing you. I'm drinking some beetroot, carrot, celery, cucumber, and apple. I got to stay healthy for you guys.
Oh, hey, man. Can we give Ryan a round of applause for the healthy drinks in the chat? Oh, come on.
Oh, boy.
Proud of you, man. Okay, so we went through some of the CapEx projects first off. We already went through some of those. We've been working on the roofs. We've been, working on the piping. We've been, just clean up, just clean up of like you said, all the things on the pine needles on the roof. That is one of the first things that we noticed as we were walking, doing our exterior walk in the very, very beginning. Clean that kind of stuff up, dead trees around. And I'll tell you, the biggest, I guess, eye-opener for me is when I first initially walked it, and the optics of what it looked like, but also the feel, like the actual feel and energy of the property. And then walking it, when was I there? I was there, was it last month? I think it was when we walked through. But then walking through again, after all this work that the team has been doing, and first off, seeing the optics, right? How it's improved curb appeal wise, but then how the team has changed the environment on the property. There is an energy there that is a big deal, man. And I think that's a powerful shout out to the team, both our operations team and our on-site team, those in the office, the on-site manager, the maintenance individuals. They've been doing an amazing job on the property. So financial side, Ryan, I'll turn it over to you. You can cover some of that stuff if you want to.
Yeah, what I love seeing is if you look at the top right one, the year-to-date actuals versus the budget, you see already after 8 months, 8 full months of owning this, they were already surpassing our budget, right? And I think that's a phenomenal thing to look at. This deal, if you recall, this deal was almost 8% in 8% debt service, right? Our interest rate, okay? Our interest rate 8%. So this was a fixed bridge loan, okay? Most of the bridge loans, you want to stabilize the asset, first. Then you want to put into long term. So I want you to think about looking at these financials as you see these reports come to you. What should you be looking for? All right. Well, you can see that the cash flow is already going up, and you see that net operating income. You see all these numbers that are positive. But I want you to think about this. A lot of you all ask, distributions. When are we getting distributions? How does that look? The financial of the property. We're already almost at a point, right? We're almost at a point to be able to refinance this property 8 months into it, which is huge. Rates, right? We're going to save almost 2% at rates. So when Tyler says this property is already performing, the fact that we're at such a high interest rate and we're still paying our bills, we're still profitable, and then we're going to refinance it to a 6% or so rate is huge, right? That's so much cash flow that's going to come back into the property. The other thing I want you to look at is really that NOI number. Remember, we want you to hold us to the net operating income. You can see right there that the net operating income is going up and down. Why? Because we have some expenses in fixing up the properties. Okay. The repairs and maintenance went up just a little bit in expenses due to the polybutylene. Okay. Utilities were up because of leaks and work orders that we had to do. Guess what? The fact that we've already fixed the polybutylene and there's no more leaks means what? Utilities are going to go down, which means your net operating income is going to go up, which is a huge thing for us. Okay. Keep those utilities controllable makes it extremely huge. Okay. Some of the other financials that stand out that you can look at, since taking over the property right now, occupancy, a lot of you asked about physical occupancy. Really, that's something that most investors think is important, and it is, but it's really, right, economic occupancy that we want to know. But for those of you who want to know physical occupancy, we're at 96.5% right now, which is great, okay? Our renewal on each of our units are 16% increases. I mean, that's huge. To the team, I mean, that's big. 16%, guess what? Since taking over, what was the number of percent of people that are renewing? I think it's 75% of people are renewing with us, which means that we're doing something right because they're staying with us, right? Over 75% are renewing with us, and we're renewing their leases, which is in today's market. A lot of people are saying, hey, are there good properties out there? Are there good investments out there? Yeah, we're actually doing it. We're seeing it. Our new leases, we're getting almost 13% increases right now on new leases, which is big. The effective gross income, that's the biggest thing. The effective gross income is going to include delinquencies, bad debt, all of that. We're already increased by 13%. So those numbers are huge. But the last thing I'll say with financials is one thing in these new reports that we want you to look at is a lot of people say, hey, well, I invested X amount, let's say 100,000. I invested that with you guys. What is my money worth today? Well, there's two factors in identifying what we can sell the properties in the future. Really, it's based off your net operating income and the exit cap rate, okay? The exit cap rate, net operating income. So we calculated off that. This is where our financials are at today. We're doing so much more now. We're getting ready to go into the interior of these properties and fix them up that we have the polybutylene done. Okay, now we go to the interiors and we push these rents from 900 to 1,200, which is going to be big. So based on the numbers where we're at today, you already see in a couple years from now, your $100,000 investment will be close to $180,000 as we fix up the interiors, right? You're going to see these numbers continue to change. So you can see in that linear graph there what your investment will be worth by the time that we exit. Okay, so that's a big thing. And once again, any questions you guys make sure you ask. We want to be able to answer those. But as you can see, Orlando Sky is performing extremely well. Once we finance, we have to wait 12 months. So we have to wait until December. Come December, we're going to start looking at restructuring that debt piece and refinancing already. So that's exciting, man.
Love it, man. Hey, real quick, Ryan, John, good to see you on here, by the way, John. He said in the upper right graph, it says that the actual NOI is below budget. At what percent is it? And you explained a little bit, it's because the expenses are higher with what we've been doing there. But do you know the percent that it is below the projections by chance?
Yeah, it's like 4 or 5%, I think, below is where we're at. That NOI has got to we got to push that a little bit higher on our debt coverage ratio, right? They're going to look at the NOI. It's got to be at a certain point. And so I believe we're about 5% below where we need to be. So remember,
how long do you think it?
Oh, go ahead.
Go ahead. Sorry. No, you're good.
Yeah, this is for the year. So remember, at 8%, we will surpass that budget by the end before the end of the year. That's the important thing to look at.
Yeah. That's exactly what I was going to lead to, dude. That's perfect. Okay, and then I saw another one that said another question. Trying to keep up, but it said Orlando Sky's 9.3% of the fund is the second property, the other 90.7%, and the answer is no. So I'll get that right here. It's 13.8% is what Arden Place represents. So Arden Place, real quick, 114 units. Remember, purchase price was $9 million. That's in Warner Robins, Georgia. Built in 1983, represents 13.8% of the fund. Remember, the fund is a $30 million fund. And so it's still an open fund that we're still raising for. There's funds that are ready to be allocated literally right now, but we're also continuing to raise for that fund. And so no, these properties represent a percentage based on a $30 million fund. So this one does not represent 90.7. John, hopefully that answers that. I want to make sure that I don't miss anything else on the other property real quick. Oh, Gary asked, sorry, on the other one. I don't know if you're replying to that, but
I just did, yeah.
Do you want me to go? Okay. Okay, there we go. Okay, I think we got it there. So Arden Place, man, once again, home run pickup. Ryan already talked a little bit about the market, how much it's growing, just the fundamentals of Warner Robins, and it's one of the largest growing cities. In fact, the largest growing city in Georgia, the state of Georgia. Tons of job growth coming in. And this property, once again, was a home run pickup for us, not only on how we acquired the property. Let's just talk about that real quick, Ryan. How we acquired the property, how we negotiated the deal, how we bought it underneath market value. You want to talk on that for a minute?
Yeah. So really the seller got into a place where they were going to lose the property. It was a deed in lieu of foreclosure. And we came in and scooped it up, right? So it's a relationship that Lindsay was establishing there in Georgia. We knew that Georgia is a phenomenal market, right? We knew that it was a great market. And we knew the insurance was a lot lower than the rest of the country. And so that's one of the biggest things, guys. We want to remember that we're controlling our expenses. If you can control your expenses, right, then you can increase your NOI, right? If we can stabilize those expenses, we can increase the income where this is mismanaged. We picked this property up for $32,000 a unit under market, which I think is phenomenal. $32,000 a unit at 114 units is almost, was it 3.65 or 3.648 to be exact, in equity. Okay, essentially equity. I look at it instant equity. I told someone the other day, I think it was Jackson, I said, basically we don't have to screw it up, right? As long as you don't screw it up, I believe it's 61% returns. And just making sure that it gets back when we can sell it again. Okay, that's without the forced appreciation that we do, right? That's without increasing the leases, And so the biggest thing is this was over $200 below market rent, and we wanted to go and push those. So the fact that we got it for $32,000 a unit under market was big. So I mean, for a lot of you, you'll see on probably the next graph that Tyler shows. Is you're going to see that increase of what your $100,000 is worth, right, in a few years. It goes drastically up because of the instant equity that we were able to get. But Arden Place it's 12% year over year in job growth, which is what we want to look at. Like I said, per capita, it's the largest growing in population growth in the country. So based on those two things, population growth and job growth, and the other fact is for those of you who've invested with us in other properties or you've invested with other people, Tyler and I made a majority of our money in the Carolinas. Why? On taxes, they reassess taxes in North Carolina every 8 years, South Carolina every 4 years. In Warner Robins or in Houston is what they call it, not Houston, but you think it's Houston. In Houston County, they reassess taxes every 3 years, which is huge to us, right? It's huge, and being able to control those expenses once again, which means more cash flow to our investors.
Dude, perfect. Okay, we can dive into here. I did see one question from Sal. Sal said, and I answered Graham. I answered your question in the chat. You saw that. Sal said, how does a new investor benefit from their investments now in regards to the existing properties in the fund? So if a new investor came in right now, how do they benefit, Ryan?
How does a new investor benefit from their investment now in regards to the existing property in the fund? Really, it's just based on the date that you invest, right? So it's more of a pro rata. So if you invest now, right, your investment will start now moving forward. For those of you invested at the very beginning, you got to take advantage of all the equity that we acquired, right? And so it's based on what we call the effective date that you guys put in. So that's what it's based off. Our investor portal is amazing. It'll automatically calculate what those returns are based on it. And then when we exit, right, it'll be based on when you guys acquired or when you brought your investment in. It'll be based on that. So hopefully, Sal, that answers your question.
Perfect. Yeah, perfect. Okay, so we've talked about. I'm not gonna lie. I was answering a question. I don't know how much of this you talked about when you were just going through what you went through, bro. Did you cover some of this? I don't want to just double dip, but
I've not covered any of this. I was looking at the questions as well. John asked, can you cover cost segregation outcome for Orlando Sky? Yep, you'll be able to see those in your K1 status. Those should be in your portal already, John, on that property. In the ALOHA fund altogether, because the Orlando Sky only represents just a little bit of it. You saw the John. I can look at yours. I haven't taken a look at it. I can't remember the exact number from the fund. In fact, if you want to go over these financials, I can pull it up potentially really quick. Or John, what I can do is shoot you an email on what that exact number was. But that'll be in your K1 right now. This coming year, though, because we closed on Arden Place in 2023, we'll hit all of our depreciation this year. So that's exciting as well. And some of the cost segregation bonus depreciation carried over to 2023 as well. So yeah, we should see a pretty big depreciation schedule in 2023 for the ALOHA fund.
And we're talking about K1s real quick. John, you said I didn't realize K1s were out. Yeah, they'll be in your portal. And if you need us to help you with that or help you log in, let us know. Once again, thank you guys for your patience as we combed through and got all those things done. I will tell you right now that the systems that have been put in place. Ryan, what's our commitment for K1s next year? When will K1s be out next year?
Yeah, the exciting news is K1s from our CPA will be out at the end of February. So that is amazing. So we've been working diligently. We switched over to a new CPA this year. And so that's a large, I mean, you can imagine all the investors that we have and what we've accumulated, moving all that over to a new CPA is a lot of work, right? So they have systems and we came in towards the end. So we kind of got put towards the back end. They do over 1,500 syndication deals a year. But we knew moving forward, it was the right decision for all of you all to take advantage, not only of these guys are phenomenal with depreciation schedule and getting the most out of our property as possible, but they're super efficient as well. So they've told us next year and committed that K1s will be out at the end of February next year, which is huge for all of us.
Yeah. And what I'll say on it, and thank you once again for the team, because I know they've been working hard. And once again, thank you guys for your patience with that. And now with Arden's Place, you can see, I mean, we just acquired the property in June. And the whole goal taking over on really any property that we acquired, first thing is just stabilizing, right? We're stabilizing cash flow, making sure that, operations are in place and we're continuing to grow. But you can already see, I mean, obviously we're just a couple months in, but everything looks so great on this property. I mean, the income is already above what the budget is right out the gates. The expenses are lower than what the budget is, and the NOI is higher than what we forecasted. So now the key, obviously, we've crushed this quarter, and after takeover. Now the key is to continue to drive those numbers up even higher. We definitely expect to do exactly that. Very excited about this property as well. Once again, new, just a couple months in, but the financials are looking very, very good. Once again, huge shout out to the team for everything they're doing there on the property.
Hey, really quick, Tyler,
anything else you want to add there?
Yeah, over the last month, I'm not sure if you just said, I was looking at a question, but the EGI is already up in 1 month, 9.5% from the previous month, which is huge. We're already making huge strides on this deal. Gross potential rent. What I love about AMC is this. AMC wants our loss to lease, right? Meaning that we're not getting what the market says we can get. Okay. If it's at 8%.
Real quick.
Yep.
AMC is our property management company. Just in case you're not aware of that, AMC is our property management company.
There you go.
Sorry, I just want to clarify.
This is why we have, partnerships, guys, right? Is that, Tyler realizes how my brain works. It works in numbers, not in details. So here we go. AMC, is our management company. They're amazing. They've done historically, they're 2.6% above pro forma. So based on our pro formas that we give them, they're 2.6% above that. That's one of the biggest reasons we go to them. But more importantly, the gross potential rent is what the highest potential, 100% occupancy we can get it at. Okay. Well, a lot of times other management companies, they just leave it there, right? They're not pushing the envelope. We always want them to push the envelope so we can get the most out of these properties. When it hits to about 8%, it automatically triggers to raise it. It could raise 2 or 3 times. So I think it's important in the last month since owning it, it went up 1% already, which is huge. I mean, 1% may not seem like a lot to you. 1% is big, okay? So the renewal increase is already in a little over a month is at 4%. And then new move-ins, we're already at 5%, just at taking over. Remember, we want to stabilize an asset at first, and then we get into value adds. On these properties, because of our relationship with AMC, we're already able to go in and do value adds out of the gate because of their systems that they have. So we're super excited about that part of it.
Yeah, love it. And John had asked, do we do distributions monthly or quarterly? It'll be quarterly distributions when we start those. And then, Ram, if you do not see, you say you can't find it in there for your K1 statement, brother, we can reach out to you and help you find that. No problem, man. So somebody from the team will mark that down, and somebody from the team can reach out to help you with that. Not even a problem. Okay, there's your highlights, man. There's your update. And once again, we're going to continue to do more of these so that we can, so that you can do exactly what you're doing right now. So you can get in front of us, fire questions away, get those questions answered. And then at any point, obviously, man, we want to make sure that the team is there to help and to update. And dude, I just want to make sure real quick, because I know that we just adjusted the number. Did I update? Is that the correct number that I updated in there? Because I know we just changed some things. I want to make sure that we give them the correct one.
Yeah, Rada, is that the Rada's on here as well? Is that the right number? 407-574-4244?
That is correct. Absolutely. And I will send a link out as well before we end this webinar.
Awesome. Hey, Tyler, really quick, if I can give some notables. I always think these are great. A lot of people want to know, what am I doing? What are you guys doing with this property? I mean, listen, we all love to make money. We do. I love to make money more than anyone. Hawaii's expensive, right? That's a good one Tyler gives, right? But really, what are we doing with the community out there? What I love about Arden Place, we raised $750,000 above and beyond what we needed to. Why? We wanted to make sure that we were safe at the property, we're financially healthy, we were able to cover any expenses that we needed to. A lot of you guys remember when we went over that. But I love to know what we're doing in the community. We sponsor the football team, the local high school right there, and did some advertising. And then we spent like $2,500. Did the same thing with Orlando Sky. Orlando Sky, the maintenance, Cecil, his son plays on the local football team. And so we sponsored that and did some advertising there, which I think is awesome to be able to do that in the community, let them know who we are, gives us good exposure as well. Other thing is we're working with an organization in Arden Place to help vets out. What's amazing, this organization will actually pay, they have to go through the same criteria to get into these, into our apartments, okay? But this organization will help them out with security deposits. And then they, obviously help pay their rents as well. Tyler and I had some properties up in Ohio, and we did the same exact thing there. And these properties doubled. It's amazing. I love to be able to help vets out. I love to be able to help just good causes. But I want to make sure that we throw out some notables as well of some of the things that Arden Place is doing.
Yeah, I love it, man. You want to talk about the my gosh, my mind is just completely spacing real quick, but the maintenance, what's the maintenance guy's name? Orlando Sky as well, and what he talked to us about when we were there. Cecil, you want to tell him what he talked about what he told us, and just the environment, the work experience, and everything that he's experiencing right now.
Oh my gosh, he you may have a different conversation too, but I think that the conversation that we're talking about is, because I've had several with him, but man, he's never been happier. Like he said, I've never been happier working somewhere. And he goes, the tenants that are there, man, are happier. you know, which is why you see over 75% of them, you know, that are renewing with us. But man, he said it's so good to see that people will take care of the property and actually put money into it. So I don't know, I can't remember if he shared anything else with you, but man, I see this guy
that's exactly it.
Compared to when we took over, right? I remember when we first looked at the property, he looked a little gloom, right? Like it was just like I was doing my job. Man, every time we've seen him since, I've probably seen him 5 or 6 times since, and just a big smile on his face, gives us a hug every time we go in there. And I think that's important, right? Your maintenance workers, your on-site managers, right? They're the ones that really will make or break who your companies are. And I think that Tyler, if for those who've invested with us several times, if this is your first time, Tyler's big belief is investing in people, right? And he talks a lot about that is as you invest, especially with your employees that you have running your properties, that's going to carry down into your tenants, right? Showing them the love and respect that they have. They have hard jobs. They have super hard jobs. So the fact that, man, Tyler Cecil gives us hugs and smiling, it's a big thing for us.
Yeah, it's awesome. And I feel horrible that I say that because then I couldn't remember his name in the moment that I needed to remember his name. Good hell.
You have a lot of names to remember.
Well, you too, bro. I want to make sure we got all the questions. And let me just scroll back and make sure we didn't miss any here. Sorry, let me scroll back up here. Oh, so Ron, if you don't mind, so Rich asked, do we have distributions planned for October as originally planned, or when do we have our first distributions set to go out?
Yes, we're actually
asked the same question.
Cool. We're actually calculating that right now to see if we can pay out a distribution from this. I think coming up. So it's the. And are those like, is that really popular, or is it just like December? So October. So it'd be really the end of October if we pay one out. We may be able to be paying a partial distribution, and then you'll see you should see a full distribution come out January. But we will be sending out a distribution. Yeah, we will be sending out a distribution. It's I believe it's October, middle of October, end of October. We should send a partial distribution.
Let me scroll through here, maybe just once again make sure I didn't miss anything here.
And once again, you know, that's when everyone invested. So if you invested from the beginning, obviously that'll be weighted that way as well. So it's a great question, Bron.
I think we got everything, man. I think we got everything. One more thing, man, before we wrap up, and if you have some more, you could certainly throw them in. But one of our team members, Greg, it's Greg's birthday now. I'm not sure if Greg is on here, but is Greg on right now?
He's not. Nope.
Hey, if you guys get a chance, you chatted with Greg, reach out and give Greg a shout out for his birthday, or you can just throw it in the chat, say happy birthday, and we'll make sure that he sees it. Okay, but. Granted, he's probably not on because you don't work on your birthday. That's one of the rules, man. So he's out enjoying the day, which as he should be. So I think we got everything, man. We appreciate you guys' partnership and everything that y'all do. Once again, any more questions, please feel free to reach out, and then feedback as well. Any feedback, anything else that you would like to know or see on these webinars that we're doing. We want to make sure if we're going to be doing the webinars, we want to make sure that we're delivering the information that you wanted to hear. So if you have any feedback or anything on that as well, definitely hit us up. Anything else, Ryan, you want to say before we wrap it up?
Yeah, I mean, you can see how the fund is performing already. Like we said, there's another property coming up that we're closing October 1st. That opportunity you have either to invest with the ALOHA fund, right, and put more money into that, or put it into the deal specific as well. If you're interested in that opportunity, make sure you reach out to Rada. She'll probably be sending you, she and her team will be sending you some information on that as well. Once we close on that, we will send it out to everyone and let you know a little bit more about that deal, what the details are as well. But Rada will send you out our business plan on it. If you want to invest, it's another phenomenal deal that we're adding to the fund. Those returns are going to be extremely good. So look forward to sharing that with you next quarterly webinar.
Sweet. Hey, y'all, thank you so much. Appreciate y'all again. Once again, continued partnership, man. Appreciate y'all the time. So reach out if you need anything. Thanks, Gary. Appreciate y'all. Thanks, Bron.
Thanks, guys. Appreciate it.
Rana team, appreciate y'all as well.